Welcome back to my YouTube channel. I am Witty. I'm a Forex trader and I do teach traders likewise how to make money navigating the financial markets. So this is a part 2 of the first video, market structure, and in this video I'll be talking about break of structure. That is basically a continuation of part 1. However, in this case, part 1 I covered how to determine the trend, and in this video I'll be talking about how to understand when the trend continues and likewise when the trend reverses. So on a typical market trend, like we established in the last video, so if you're yet to watch the last video, make sure you do that so you understand what I'm talking about in this video. In the previous video, we mentioned for an uptrend, you have the basic characteristics of price making a higher high and then a higher low, and then makes a higher than previous high and then a higher than previous low, which is a higher low, and it does that till price then breaks the previous higher low, and at that point we have a reversal break of structure. So likewise at this point right here, I do not know the trend is going to continue unless price then breaks this structure. So basically the break of structure occurs when price makes a new swing, either swing high or swing low in a prevalent trend. So which means you first of all need to understand what is a swing. You need to mark out your swing highs and lows on the charts before you can then determine exactly what would warrant a break of structure and figure out exactly what is a break of structure. So basically in a bullish trend you have break of structure to the upside. So each time a higher high is broken, we assume there's a break of structure and then the bullish trend continues. So then it creates a higher high, a pullback to create a higher low, and then a break of structure to create a higher high, another pullback to create a higher low, a break of structure again to create a higher high. But what then happens if a higher low is taken out? That means you do not have a low that was higher than previous low, but instead what you have is lower than previous low. So at that point you have a lower low, and then there's another pullback usually to maybe the other block, probably a breaker block or the like. So in the next video we'll be covering order flow, so you definitely want to watch that also to complement your knowledge. So now we have a lower low, and you expect in a downtrend price you form a lower than previous low and then a lower than previous high, and as soon as price breaks previous lower low, you assume that is a break of structure for a downtrend to continue. Then it creates a lower than previous low to give a retracement. The retracement ideally shouldn't be as high as this, so it will give you a lower than previous high, and that is basically how an uptrend works till you get a reversal. And whereas for a downtrend it's almost the same thing, you have a lower than previous low, a retracement to give you a lower than previous high, and then price break structure, which is the previous swing low which was labeled lower than previous low, and now you have another lower than this previous low, a retracement to create a lower than previous high, then a break of structure to signify trend continuation, another lower low, a retracement, a break of structure for trend to continue. And now you are expecting price to create a lower than previous high, but instead price breaks the lower than previous high to create a higher than previous high. So at this point now you have a higher high, and the price will come back to retest other block or breaker block or something, and then you expect that for the uptrend to continue there has to be a break of structure, which means the previous swing high, which we label the higher high, has to be taken, and soon as that happens we assume the uptrend continues. So let's get on the chart and see how it operates in the live market. So the basic concept is we have the higher high, higher low, higher high, higher low, higher high, higher low. So to understand break of structure properly, what you should do is to mark out the swing points. The higher high, you need to mark it out, and you do not know this is the higher low unless there's a break of structure. So after there's a break of structure, you then mark this out: higher low, higher high, higher low, and this would help for easy recognition. So if in an uptrend the higher low then gets taken out, then at that point you know that definitely you are expecting a reversal. So looking at Euro USD now, if we're marking out the swing points in this downtrend, this becomes the low. So it's almost like marking your levels for those of you who understand levels. So you can even have more detailed swing points. Like for instance, you see there was a break of structure right here. There was a break of this swing low. So this became a new low. And then after this was taken out, you mark the high responsible for this low, which is this high. Then a new low. And after it gets taken out, you mark the high responsible for the low, or the highest point basically before the break of structure. And then this happened again. So if we're then going to mark this out, this then becomes lower low, this becomes lower high, this is lower low, this is lower low, lower high, lower low. And after this was taken out, you'll have expected price to then give you a retracement into maybe this other block and complete a higher high, because in this case now what we had was lower low, and then we had a high higher than the previous lower high. So you'll have expected a pullback and then a higher high, but there was no higher high, which meant that the downtrend obviously just continued. So we can elongate this. So soon as price broke this structure down here, we know that the downtrend has clearly continued. And then we mark out the high before this downtrend, which was right here. So this becomes swing high likewise, and then the low, and then this is another low, and then the high. And that is basically what forms the basis for our lower lows and lower highs to determine the overall trend. So let's assume this is how it goes. This is the lower low, lower high, lower low, lower high, lower low, lower high, lower low, higher high, but instead it delivered a lower low. So now we have a lower high, and the trend continued further. However, on the daily time frame, we are working with a very large range. So let's switch to the 4-hour time frame for easy recognition. So in the previous video, we had established the highs and the lows in this particular daily time frame ranging market or retracement. However, this time around, let's do a much more detailed version of it and actually identify the swing points in this particular daily time frame retracement. So in this case now, we have a lower high, and then a lower low, which then created lower high, and then there was a pullback which broke this particular structure, and after it broke this structure, this will have been the low before this high was created. So we draw this out. So what this means basically is, so before that, this was the low before this particular high, or we could have marked this. However, this isn't so clear, so I would prefer to mark this as my swing low. So what this means is, if price breaks this point, this is the previous higher low. So if price breaks this, I know the downtrend continues. And then in this case, there was a higher high. So if price breaks this higher high, I know that definitely the uptrend continues, which was what price did right here. And then this was the low just before it broke it. So after price took out this low, we know that there's likely going to be a continuation of a downtrend. So if we are then going to label it, we'll label this as lower low, lower high, lower low, and then higher high, a little pullback to create a higher low, and then higher high. We could mark this, but I don't like this swing, so I'll rather use just this, and then higher low, higher high, higher low, and this will have been the higher high, but this is also a swing low just before this and at this point. So it's very possible you have the swing points that are not even creating the higher highs or the higher lows, but what you discover is these swing points on the 4-hour time frame that are not looking so clear, if you then switch to the 1-hour time frame, it will look much easier. So now on the 1-hour time frame, we can see that there are actually even more swing points. So which means this was the low just before this high that wasn't so clear on 4-hour, and after this was broken, we see how the downtrend then continued, and then this was the high. This became a low, this is high, and then a low, and then a high. So what this means is basically the higher time frame bias will help you to understand where exactly you are in the market, because overall all of this was a 4-hour pullback, and overall all of this is just a daily time frame pullback. So in this case now, this was high on the 1-hour time frame, this is the swing low. So as this was taken out, then we can see and we confirm that a downtrend will continue. So in this case, if we are going to label this, this becomes lower low, lower high, lower low, lower high, lower low, and then this was taken out as the break of structure. So this becomes higher high, a pullback to create higher low, and then another higher high, higher low, higher high, higher low, higher high, higher low, higher high, break of structure right here to create lower low, lower high, lower low, lower high, lower low, and then a break of structure again to create higher high. And if we're marking the break of structure as a trend continuation break of structures, then we realize that at this point we had a bearish break of structure to continue the downtrend. At this point we had a reversal break of structure to continue the uptrend, and then this was another break of structure to continue uptrend, break of structure to continue uptrend, break of structure to continue uptrend, break of structure to continue uptrend right here. And then at this point likewise, break of structure to confirm a reversal, break of structure to continue the downtrend. In this case, the break of structure confirmed the reversal. So the break of structure will both serve as the confirmation of the continuation of your trend or the confirmation of a reversal. So if we continue marking this, this becomes the higher low, higher high, breaking this previous structure. Then this becomes another lower high, or rather higher low, and then a higher than previous high, breaking this this swing point, which is a break of structure also, then a pullback, break of structure, pullback, break of structure. So unless this structure is taken out, which was taken out right here, so this break of structure is a reversal break of structure, you have a pullback, and then now another break of structure right here, which broke this structure. You have a lower low, lower high, price broke this structure. So you basically understand this is how the break of structure works. And then if you are marking it out with order flow, it makes everything even make much sense. So in this case, structure was taken out right here, price came back, retested order block, and did a massive buyout. Let me change the color of this. So once again, after every retracement, you expect price to pull back into order block, and at that point you can then take your trade. So in this case, what the price do, came back into breaker block. And then broke structure again, and then after this break of structure right here, what happened? Price came back to a retest breaker block. So right here also retested the other block. Once again retested other block. So basically you can just frame your entries using the order block and the retest. So price almost got there but did not retest exactly. Then in this case there was a break of structure, price came back, retested order block and bought for a while. In this case also broke structure, came back to retest order block. And then what you notice in this point is this was a 4-hour swing low which created which confirmed a 4-hour trend reversal. However, on the 1-hour time frame, we realized that this was a swing low just before this swing high was created. So which means on the 1-hour time frame, you'll have known earlier that the trend was definitely going to reverse, till you then add the overall reversal that continued the daily time frame sell bias. So what then happened, or what basically happens, is after a previous swing high in an uptrend, you expect price to pull back into another block to continue the uptrend basically. And if it is in a downtrend, likewise, you expect price to pull back into a other block. That would be the retracement to form the lower high in the downtrend, and then eventually you have an entry which then continues the overall trend. So this is basically how break of structure works. So in an uptrend, it's the same concept. You expect price to form higher high, to form higher low, and then break structure to continue the uptrend, give you a retest into a other block, and then create higher high to break previous structure. And soon as higher low is broken in an uptrend, you have a reversal, and then you expect price to retest either breaker block or other block, and to create a higher low, and create lower low, lower high, and that is basically how the trend works. So in the downtrend, you want to see a break of structure of previous lower low to continue the trend. So this is basically how the break of structure works. In the next video, I'll be talking about order flow in depth. So see you in the next video.